Yeah. So, typically what I do is I go through like euro dollar and then show you technically and stuff. I want to show you a different process today. It's something that we actually did at traders.com. And it was a slightly different setup than our traditional process, but I just wanted to share it because I thought it was pretty good. And I'm like, yeah, everybody needs to know. So, okay. So, what you do is you start with your fundamentals, right? And you analyze your fundies and you create your hot list and your cold list, your buy list, your sell list, your bullish list, your bearish list, whatever. We have all the data economically, right? So we get our scores and we look at interest rates and jobs and inflation and GDP and the technical charts and seasonality and retail positioning and institutional positioning, and we create scores. But to do that, we have to do that analysis for New Zealand, and then we have to do it all over again for Japan, and then do comparative analysis. So Kiwi yen should be bullish quantitatively. Yeah. And of course, and we do that for these things. And sometimes the fundamentals and the technicals line up and sometimes they don't. So we're very bearish on Aussie Kiwi. Check it out though, the chart's going up. Well, it's either going to create a lower high, but that's a technical longer term. Actually, it's really statistically the slope of the mean is a positive integer. So it's either going to be an opportunity in the future, but it's a threat right now. Pound Kiwi is right, good as I was going to say good as gold, but I don't know. Gold is neutral. You want to tear that down. So anyway, so you start all of that, right? And you develop your biases, and then you go to the technical charts, and this is what we did today. And so you go to settings, and let's say you turn everything on. Well, you should line things up based on your fundamental biases. So maybe your hot list and your cold list, and then you filter out, you only want to trade the hottest things and the coldest things. And all the things that are neutral, you want to pass on. You don't even want to look at the technical setup because logically they're neutral. Okay, fine. But let's just, I want to show you how to burn through 7,500 charts. Well, I guess we're not counting these, so it's probably only 5,000 charts. Okay, and we're only looking for reversal patterns and trending patterns, right? So we go there, and now here's the entire Forex market, right? Great. So 5,000 charts. 3, 2, 1. That's a threat. That's a threat. That might be an opportunity. Pound Swissy or CAD Swissy. Okay, how does that work now? Ooh. Well, first of all, let me just continue. I want to show you. CAD Swissy, maybe. This breakout pullback. Maybe. No, pass. That's a threat. So maybe off the moving average, euro yen up, maybe. And this is down with a break, maybe later. This is up with a potential break, maybe later. This might be reversing, maybe later. Oh, this might be Aussie Kiwi. Cool. That might be a buying opportunity. So you write that down. Okay. Pass. Okay. Remember, I'm going through 5,000 charts here. Maybe later. Pass. Maybe. Pound Kiwi. Maybe. Okay, put that on the list. Yeah, that looks like a decent opportunity. Yep. Euro Kiwi. Yep. Put them on the list. Okay. No, pass. Pound yen up on a 4-hour chart. Yeah, that looks good. Put that on the list. Pound yen 4-hour chart. You got it? Pass. Yeah, Euro Kiwi on a daily. Yeah, we liked it on a small time frame. We like it on a daily. Put that on the hot list. Pass. Oh, Kiwi Swissy on daily. That might be a sell. Put that on the list. Okay. Kiwi Swiss franc daily chart. Okay. It's in a downtrend and the next leg is down. Put that as an opportunity. Okay. Put this one, Aussie CAD daily, could be an opportunity. Buying on the moving average or buying off support. Put that on the list. Okay. Pass, pass. Okay. Pass, pass, pass. Maybe off the moving average, pound yen daily. Put that on the list. Pass, pass, and pass, pass. Done. I just did 5,000. So how many opportunities did I see? 6 out of 5,000. So there's 4,994 things that can waste my time today. But let's say there's 6. Okay. I can do further analysis and zoom in, and you're like, ooh, there's the one that looked bearish, remember? So what's the trade plan on this one? Okay. You see? So that's a big giant maybe, but that's not technical analysis. That's only pattern recognition. I'm only looking for trends with setups. We might have trends, but no setups. We may have counter trends. I don't trade counter trends. I'm a trend trader. Now, some of these are neutral and are sideways, and you're like, well, but my long-term bias is up, so maybe I still want to. Well, fine, I don't want to do that. So in about, what was that, 2 minutes, 3 minutes, I analyzed 5,000 different opportunities in Forex and got it down to 6. And of course, I can do that with everything, right? So then what do you do? So remember, one of them was pound yen, right? One of them was pound yen. So here's what I did here today. So you go to indicators and I open up my checklist. And so what I ended up doing here is, what was it? Pound yen on the 4 hour, right? So what I did was something like this: Great British Pound, yen, 4H buy, I think it was, right? And as you do your hot list, you just, right, you write things down here. Okay, you following so far? So here's my hot list. I'm interested in buying Aussie CAD on a daily. I'm interested in selling Kiwi Swiss franc on a daily, and I'm interested in buying pound yen on a 4 hour. Cool, watch this. Now I got a 4 hour chart. Okay, and now I look at my list. Hang on, I guess I should put it here. Nice thing about this is I can put this lower left lower chart. Okay, there we go. So now there. Okay, so I want to look at pound yen 4 hour. So I go to my beast. Where's my beast? Come on, beast. There it is. Cool. So I have pound yen 4 hour chart. I'm interested in selling it. Cool. What do you think? Well, buyers are going to buy here and sellers are going to sell lower highs. And now I start to do technical analysis. Now you're like, well, Wayne, this isn't much better than just the basic pattern recognition chart, right? Well, so here's the thing. If I kind of messed up a little bit because when I gave this example, I did it on one of these clean charts. Okay. But for example, I could have done it on a chart like this, or even more simplified, but whatever. Because there's two things here. There's weekly and daily pivot points, right? And so imagine if this was pound yen, I guess I could take it up to pound yen, but imagine I wanted to sell this. Technically, I would say this is today's sell zone, and this is this week's sell zone. So if I was going to be a bear, I would look for something like that, right? And that's how you combine technical and fundamental analysis. And we did it in a methodical process. Okay. Now, if I change the template, I'm going to lose the checklist. But I mean, why not? I'll just show you how to add the check. So we go template. You can do pivots confluence, which is actually, that looks really clean to me too, right? Like, would you guys agree that that could be a sell zone if you were already looking? So remember, we indicator custom, add your checklist. Where's my checklist? Okay, what was it? Pound, Great British Pound, JPY, 4H, sell, I think, right? Put that in the bottom left corner. Delete. Okay, so it was like this, right? So that was all right. So you have your list of 10 things you wanted to do today. One of them was maybe on the 4-hour sell pound yen. Are you going to take the double top? FX Monitor's strategy. This is just analytics. This is data. Like, for example, if you don't know how to trade a double top, it's not a strategy. This is just data. You either know or you don't. So this isn't sort of like a cool way of doing it. This is the only way of doing it. Okay. But anyway, so if you were a bear already, okay, is that an opportunity for you? Well, you might be fundamentally bearish, which we did before we even analyzed the patterns. And then on TRADARS pattern recognition tool, it found a bearish sell setup on a 4-hour chart. So we knew to look at the 4-hour chart. And now you're like, okay, well, fundamentally I'm a bear. Technically, it seems to be bearish. Could I be a bear here? Well, you're like, well, I'm worried about that moving average, but if I can sell high or the moving average breaks, you can engage. So imagine you don't sell it now. You could though, right? But what if it did one of these things? Well, then you could sell here and you could sell here. But the thing is, you're ready, willing, and able to how do you say, confirm that your bearishness, well, how about confirm your bearishness with technical analysis? Would you sell pound yen at a double top or a lower high? Only if you're a bear, but you have to know you're a bear fundamentally or seasonally. And you'll already have a technical analyst that has spotted a reversal pattern. And so, yeah, could you sell that? Yeah. Okay, a lower high would be more conservative. A lower low, lower high would be easy as pie. But the thing is, we were able in about 3 minutes to analyze 5,000 Forex pairs. Well, 5,000 opportunities. We looked at all the pairs on 5 time frames, looking for the top 20 reliable, repeatable patterns. And in 3 minutes, we found 6 opportunities to look at, and everything else was a waste. Okay, that's worth $1 million right there. The second thing is now we're like, well, we want to sell pound yen fundamentally. And if that was your opinion, then we found a sell pattern on the 4-hour, not the 15-minute, not the 30-minute, not the daily, not okay. We found one on the 4-hour. And so if that is now your if you want to engage on this, then you knew that this was happening and you knew to focus on it. Now, we got a lot of problems with JGBs these days. Are you guys watching that? And are you guys prepared for Sunday's election in Japan? Have you analyzed the Bank of Japan's monetary policy and their inflation and interest rate projections for the rest of the year? Well, you should. TRADARS has all that data. But what I'm pointing at here is you may not be a bear. I'm not going to tell you what to do. You can just log in and do your own analysis, right, FX Monitor? But here's the thing. If you're a bull, you're going to ignore the pattern. Why? Because you're not a seller. If you're a bull, this is a threat. Okay? So now you would wait for TRADARS to show you a bullish pattern. Pattern. We're looking for patterns. It's not doing technical analysis. What do I mean by a pattern? Well, let's give a. There's two things. There's only two. There's a trending pattern and a reversal pattern. It's not technical analysis. So the trend is either up, down, or sideways. Now, you might be fundamentally bullish, but no one gives a dang if it's falling. It's technically bearish. Well, if it's technically bearish, you're going to get nothing but down patterns. And you're a bull. All right, well, you might be right, but you're not right now. Okay? So there's trending patterns, and then there's reversal patterns. So, okay, you need to know if you're a bull or a bear. Sorry, the machine's not going to do it for you. You have to have an opinion. You have to be the boss. But you can't waste your time looking at the 4,994 things that are a waste of your time. You have no hope if that's what you do. Okay. Cool. Now, again, imagine you're a bull here. You're on the opposite side of the trade. Remember, every time you're a bull, someone else is a bear. That's just life. Okay. Well, so here's the thing. You still have to know how to trade, right? FX Monitor. If you don't know how to use moving averages, then you can't figure this out. If you can't use pivot points, then you can't figure this out. Like, for example, let's go back to the bearishness. Okay. Double top on the M3. What's the target, everybody, for a bear? Hopefully the lag isn't here, but I'd like you to answer. I think it's important enough that I'll just wait for the lag, probably a 30-second lag. But if we sell this double top, what's the target? Double top at M3. I'll wait. Please answer. Yeah. Beautiful. There's the target. Just happens to be the monthly central pivot point, too. Osamu, I like that answer, too, but not necessarily. And I'm relating. I guess the question was technical. Okay. So look at this. So for those that have no idea what that is, or you didn't know that was the target, just think about that there's lots of people in this room that know that as a basic fact. And if you're like, I have no idea what that means, they're better traders than you. And that would piss me off. Okay. Now, let me be clear. Do we know that that's going to happen? No. But if, then, okay? They're if-then statements. These are hypotheses. Okay? If you're a bear, so if you sell that double top, then your target is 19632. Okay? And if you don't know that, well, then there are other traders in this room that are better than you. Hey, I'm not insulting you. It's just, it's factual. They know that. They're just like, dude, they've known that for 10 years. Okay? So what does this mean? Oh, that's a good 350 pips. Cool. If you're a bull, what do you think? Okay. 199 is interesting. And you might buy it as low as 198.50. So there's a 50 pip range if you're a bull in which you are going to buy. So you might as well just bid the sucker. And set up your trade plan. Okay. Cool. So who's right? Nobody knows. But if you don't know what you're doing, you're just going to get crushed on the long term. Sometimes you get lucky, sometimes you don't. Professionals don't trade that way. Okay. So you might get frustrated because you're looking at the wrong thing at the wrong time. You keep betting on the wrong horse. I can fix that. Costs $200 a month. We can just fix that. What's the odds you're going to look at the wrong thing at the wrong time if there was 4,994 illusions? What's the odds that you're going to look at the wrong thing at the wrong time for the wrong reason? Almost 100%. Okay. So we'll give this we'll give this an explanation. Okay. If then. So I'm in a trade here. Stop's already at break even. Can't lose money. Good. Will it work? Oh, I don't know. Is it technically bearish? No. In fact, here it's still technically bullish. Okay. And it is a higher high, and I don't sell higher highs, but I did. This is fundamental and technical. Okay. So please answer this question. When did I say I was interested in selling the stock market somewhere, I would say early July? July 1st is when I'm interested. This is the middle of the month. Okay. I wasn't thinking the end of July. So somewhere in this period, and it could have been a little earlier than that, right? So between June 15th and July 15th, with the focus on July 1st. Okay. See, I even wrote top question mark. Why? Monthly M3. Once again, basic technical analysis. And then I saw this. So would I sell this? No. Would I sell this? No. Would I sell this? Yeah, I did. You have to understand why. Okay. But when did you know that this was my plan? When did you know I was interested somewhere in this period of time that I would look for opportunities to sell? Remember, I don't know if I'm right. I just know what my trade plan was. So when did you know what my trade plan was? Please answer. Remember, if I did this a long time ago, then it couldn't have been technical. Now, the actual pull the trigger was technical. But if I knew this a long time ago, anybody? Denise says the beginning of the year. Osamu says March. Denise says January. Another vote for January. Anybody else? Months ago. Anybody else? Let's really show the newbies how to be a professional. How long ago did you know that that was my plan? Okay. Cool. So it couldn't have been technical if we're talking about 7 months ago. 6 or 7 months in advance. So if some of you find that shocking, it would make me mad. Well, if I found it shocking, it would make me mad that I don't know. I didn't even know that that could be done. Now, we don't know if it'll work, but I'll tell you what. If it doesn't work, okay, if it doesn't work, would I sell a double top? Yep. Would I sell a lower low? Yeah, in fact, I would sell the lower high after a lower low. And I know it's not for minutes. I know it's not for hours. I know it's more than a day. In fact, I know it's more than a week. In fact, I know it's more than a month. So if that occurs, remember, if this occurs, then I sell. But like the entry was based on time, the exit will be based on time. What do we call that when our trading is based on time but not price? Because remember, charts are only time and price. So you might be good at technical analysis, but if you suck at time, technical analysis is primarily about price. Buy at this price, exit at that price. Great. Well, what about the time aspect? Time of day, time of the week, time of the month, time of the year. You have to know this stuff. Yeah. Time of the month is crazy, right? So I hit that hard in like the day trading. I think it was day trading, the day trading course. It might have been the swing trading course. I hit it really hard. Like, you need to know when to make these trades. Now, we do have analysis on that you might find helpful, right? So one of my favorite pages is this United States. Our implied volatility page is just fantastic. See, here's the price of bonds falling. We talked about that earlier today. I was teaching at traders.com about fixed income commodities and currency trading at banks. But here's the correlation that we talked about. Yesterday, the stock market fell, and this is the 10-year T-note. price, not yield. And so the stock market fell, and look how hard. Look at how hard the 10-year T-note fell. Why do I make a big deal out of it? Well, what your dad taught you and what your grandma taught you was when the stock market falls, and it did fall yesterday, this should rise. But it didn't. It's positively correlated. Oh my God, that's terrible news. Now, you could just sit on this, and this page updates itself. Actually, not this page, this asset. If you just stare at this asset all day, let's say you're going to trade the 10-year T-note today. This will just update. Every 15 minutes it updates. Cool. So like we were interested, or we talked about maybe selling pound yen, right? Cool. So you bring this up and now you stare at this. So if you're a bear, what do? Well, this is the implied 4-hour low, or a 1-hour low. So you got to be cautionary there. Here's the implied 4-hour low. And you'll probably get something like this by the end of the day if you're a bear. Just know that what we talked about is it might be a double top. But what if it's not? Well, it should have kicked off the moving average, but it didn't. The next level of support okay, so we're asking on Wednesdays at this time of day, what is we'll call it average true range. You might be more familiar with that. Okay, what is the average range for pound yen this hour and on Wednesdays? So not Tuesdays, not Thursdays, not later today, not earlier today, right now. How much does pound yen typically move? And the top and the bottom of that range is here. So what would a bull do? A bull would think it probably won't fall much farther than that. Because what they're doing is they're measuring Fibonacci here, right? Most likely. And they're measuring this distance, and they're doing 382, 50%, 618. So their plan is to take it north, right? And this is where, if that works, where we'll be in 24 hours. Okay? Based on the average true range, not of the 1H, but the average true range of the 1 day. So we're measuring all of that. So pound yen, if you're a bull, you buy a dip somewhere between the 1-hour implied low and the 4-hour implied low. And if you get the opportunity to get in, then your daily target's going to be there. Daily, not meaning today, but next 24 hours. Based on what usually happens between Wednesdays and Thursdays. Oh my gosh, this is smart, right? It's crazy smart. Oh, but we're a bear. Okay, well, check it out. We broke the moving average. Oops, let's do this in a different color. Still didn't do it. There we go. All right, let's do this in a different color. All right, so you're a bear. We have a double top. It made a lower low, lower high. You're selling off the implied 1-hour high. What's the next target? 4-hour low. Then we're going to probably do technical analysis here. Come back up, roll reversal, and 24 hours from now, be at 197.62. However, that's just 24 hours. Do you remember our target was 196.50? Why? Because we said this double top was at M3. Therefore, our target is M1, which is another form of this. It's based on implied volatility, but not of the day, of the week. And now you can just sit here. You can just sit here. This page, this asset will update on its own. You can just sit here every 15 minutes. It updates, and you see us drifting through the day. So we got another couple of hours of good volatility, and then this trade is going to collapse in volume. But buying a dip on Wednesday, if you're a bull, is a good idea. Well, I guess we shouldn't say that. Tuesday has more volume than Wednesday, and Thursday has more volume than Wednesday. We just don't know the direction. So it's either going to pick up to the downside or it's going to pick up to the upside, and that's your job to figure out which one. Are you a bull or a bear? If you get frustrated with that, it's because you're not doing the job right. You should already know if you're a bull or a bear on this. Then it's much clearer. You're like, dude, there's no way this is going to go down. You're like, double top. Dude, that's just, right? You're like, no way, man. This is the plan. See, that's clarity. You're like, what do you mean pound yen down? That's the dumbest thing I ever heard. But you might be the other way. You're like, okay, this has been going up and it's very unusual. So you're waiting to confirm the down. And maybe it's the double top, maybe. But what if it fell to 96, which is down here? Would you sell the next rally? Next week? Heck yeah. But the thing is, this is not confusing. If you're confused, it's because you're not making decisions. You're asking, oh, the moving average is crossed up. Do I buy it? Oh, I'm at an M2. Do I buy it? Oh, MACD. Look at MACD. Should I buy it? Look at the MACD divergence. Should I sell it? I know you're looking for signal. You're supposed to be a boss. You're supposed to be making decisions. And to make decisions, you have to have analytics. You have to have the data. And we have all the data, sentiment, fundamental, and technical, and performance coaching to teach you how to trade, because none of this matters if you don't know how to trade. Because you're still doing the same silly stuff if you're like, well, does it tell me to buy or sell? It doesn't tell you to buy or sell. If this told you to buy or sell, I would just keep it for myself and become a billionaire while I sleep. But I have data at my fingertips so that I can make sound decisions. Every trade I make can be intellectually defined and supported. Every decision is rational and can be proven quantitatively. I only buy assets that should go up rationally, and I only buy when they're higher lows in an uptrend, in particular when it's normal for it to be going up. And everybody else is just a liquidity event. Some knucklehead on the other side of my beautiful trade. Sometimes it doesn't work. Yeah, that happens. But you have to remove the lack of confidence where you're like, yeah, well, it's good, but it collapses and whatever, dude, get over it. If you made 1,000 logical, intelligent, well thought out trade plans based on sentiment, fundamentals, and pattern recognition, and executed with precision as a good technical analyst, what percentage are your winners are going to? What percentage of traders are? What percentage of those 1,000 trades are going to be losers if your decision-making process is like that? Sound logic and precise technical analysis aligned with market. Dude, I'd rather do that than just be random every day. Hey, why'd you take that trade? I don't know. MACD told me. Why did you take that trade? I don't know. I saw some green candles. PPI today indicates the Fed doesn't cut in September. So good might be bad, but good might be good. Once again, you have to know the fundamentals. So we have all the fundamentals and we have performance coaching. Okay. So this afternoon, Peter's going to do stock market trading. Performance coaching for those that trade the S&P 500, NASDAQ, DAX. Yeah. On a day where these things are moving. All right, so stop trading like an amateur. Get yourself an TRADARS, the TRADARS platform. Huh? Let's do a news update and then we'll call it a day.
After PPI, Pantheon sees core PCE at 0.28% for the month of June. Silver price forecast: softer PPI data underpins silver but US dollar. Bullish momentum persists.
U.S. industrial production expands 0.3% in June versus 0.1% expected. Gold price rises as U.S. producer inflation softens, easing rate expectations. Factbox trumps tariffs. What's in effect and what could be in store? United States capacity utilization came in at 77.6%, above expectations, 77.0 in June. United States industrial production, MOM, came in at 0.3%, above forecasts, 0.8% in June. Euro-US dollar price forecast, mounting tensions hint at lower lows.
Ukraine's foreign minister says Kyiv was ready for further peace talks with Moscow.
Bay Street may open with positive bias. Have a wonderful trading day. The markets are opening. Ding, 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 ding. Go get